Hello, traders. FX Pip Collector here. Today is Wednesday, March 12th, and this is my morning video where I like to take a look at the US dollar pairs, including gold, and I also take a look at a couple of the JPY pairs. If you haven't done so already, definitely do check out my free Discord trading community, linked at the corner of the video in the end, also in the description. Don't forget to check out my website, fxpipcollector.com, if you'd like to gain access to all these benefits listed below and more. So, anyways, I always like to start off by looking at the US dollar index and the news for the day. Today is a pretty important day for the news calendar. We have Lagarde speaking this morning, which that starts in about 45 minutes or so. We got Lagarde speaking. We have CPI for the US dollar today, so we have inflation data coming out for the US, which they are forecasting inflation to go down a little bit, which would be good. And we also have interest rate for the CAD today for Canada, which they do plan on lowering interest rates 25 basis points. And then the press conference is pretty important to pay attention to also because that's where the Q&A normally happens. And that's sometimes when the actual big move that happens is during the Q&A portion of the press conference. So, anyways, I always like to start off at the US dollar index. I'm very bearish the dollar. I still think that it's going to end up all the way down here to about the 100% Fibonacci extension of wave A, projected off the top of wave B. That doesn't mean that there may not be rallies on shorter time frames. That just means that it should continue to make lower lows, lower highs on this higher time frame. Now, going down to the daily, this thing is for days now been just kind of sitting in this one area. Definitely don't disagree that it looks like it should pull back, but the fact that it's closing below the 50% and the 38% Fibonacci extension, and this is like the at least the fourth attempt to break out, I think there's a good chance that it is going to break out. I think there's a good chance it's actually going to keep on pushing down to the 61% before we see any sort of a significant pullback. We have inflation data today for the dollar, so that's definitely going to affect all the dollar pairs. Moving on to the euro dollar is actually sitting right in between two Fibonacci levels, as you can see. I definitely wouldn't expect to see too much resistance until it at least hits the 78%. So I would definitely be looking at anything I see on shorter time frames as nothing more than a correction to the uptrend at this point, 100%. So keeping that in mind, taking it down to the 1 hour time frame, I personally am definitely looking for longs. Anything we see down, like I said, could just be another correction. We have a little bit of a 1, 2, 3, 4, 5 waves up right now, so maybe what we're getting now is just a correction to those 5 waves. Definitely looks very corrective down. This type of price action is usually a little tricky because that's kind of 5 waves down, so I think it might end up doing something like this before it goes up. But I personally am definitely looking for longs unless we get a very significant break of structure all the way down here at today's news. If that does happen, I will be more than happy to start looking for shorts after the break of structure. Moving on to the pound dollar. Pound dollar has really been struggling to get beyond the 61%. We really never did make that much of a significant pullback. I honestly would not be surprised if this thing did just keep on pushing up to the 78% and possibly even further than that. So be very careful with assuming that we're going to make a pullback of the dollar pairs. Inflation data today could cause it to go down just to grab liquidity and then shoot right back up, honestly. So going down to the 1 hour time frame, same type of thing as the euro dollar. We have a pretty nice little 5 wave trend right here. Most corrections do take out the inner wave 4, and I don't really think we quite did that yet. So that's kind of why I was thinking, okay, well maybe this is more like 5 waves. This is going to be like 3 waves, and then it's going to go down. Maybe at the news, grab some liquidity, and then continue the uptrend from there. I personally would be very focused on longs right now, unless the CPI news today causes a big break of structure to the downside. I am definitely focused on longs at the end of every pullback I see. So, keeping that in mind, let's move on to the Aussie. Now, the Aussie is quite a bit different. The Aussie and the Kiwi are quite a bit different than the other dollar pairs, but I still think it's going to end up continuing the uptrend at some point, probably in a big old giant wave 3, eventually probably going all the way up here. I'm hoping this is already a wave 1, this is already a wave 2, and this might just be a 1, 2 of 3, and it just starts taking off, making higher highs, higher lows, within the next week or so, maybe even today, who knows. So what I got is my Fibonacci retracement on this last move up. I'm looking at this move down as possibly a correction, and I'm definitely looking for longs in an uptrend. So moving down to the 1 hour time frame where we look for entries. Yesterday I was saying that this looks like a perfect ABC, which honestly it still does. It looks like 5 ways down, corrective up, 5 ways down, Fibonacci bounce. But the move up is really not all that impulsive. If this really was a wave one and this was a wave two and we were just beginning a wave three, I would expect to see very impulsive movements to the upside, which we really don't have yet. So we'll have to see what the news does. If today's news causes the very impulsive moves up, which I think it could, then yeah, that should confirm wave three. Otherwise, if it does end up pushing down to the 61% or the 78%, I would definitely still be looking at it as nothing more than a crescent to the last move up. And I would definitely still be primarily looking for longs in an uptrend. Moving on to the Kiwi dollar, exactly the same analysis as the Aussie dollar. The Kiwi is actually a little bit stronger than the Aussie right now. If you look at the Aussie Kiwi, you can see that. But same exact analysis, which is why I don't cover it. US dollar CAD. Now we have Canadian interest rate coming out today also. Now this to me kind of looks like impulsive down, break of structure. It looks like 5 waves up. I think this is an A. I think we're in an ABC of B, and I think there's a good chance it's going to go up again for a C, and this is going to be like a 1, this is going to be a 2, and then maybe in a few weeks it goes down for the big old wave 3 that we have been waiting for. So I'm looking at this move up as possibly a wave B of B and possibly going down for a wave C of B. So I think we're inside of a correction right now on the US dollar CAD on the daily time frame. Now going down to the 1 hour time frame, this is where I think this is an A. This move up right here, the only problem I have is it's not really a recognizable correction. It's more like a 7 wave uptrend, but there's a good chance it's just like a motor wave B. We got an impulsive move down yesterday with a break of structure, even though it did reject structure. But for me, the key is that this move up looks pretty corrective compared to the move down. I think there's a good chance this could even go down, turning into that down trend that I was showing on the higher time frames, which would be a 1, 2, 3, 4, 5 of wave C, which likely is a wave C of wave B, I believe. So I'm definitely looking at this move right here as a correction to this last move right here. And with the Canadian news coming out today, hopefully we'll get a nice impulsive move to the downside. And today's interest rate for the CAD and CPI inflation data for the dollar is definitely going to have a big effect on the Canadian for sure. So, anyways, moving on to the US dollar Swiss. US dollar Swiss is definitely still in a big downtrend. And most, wave A's or wave ones, which I would definitely call this whole move down an A or one, do take out the low of wave four, which we have not done yet. So I am definitely looking at this move up as likely just a correction to this move down, and I'm definitely still looking for shorts in a downtrend. I'm looking for a recognizable pullback up to a Fibonacci level and then another sorting opportunity. So going down to the 1 hour time frame, I mean, honestly, this thing literally could just continue to downtrend at any point, especially with all this news coming out today. I would like to see it make some sort of a recognizable 3 wave pullback up to one of these fib levels, maybe something like this, and then down, because that would make for a much clearer pattern and a much clearer entry. And I'm always searching for clarity with my entry. So if I see something clear like this, some sort of a 3 wave corrective pattern up to a Fibonacci level, and then an impulsive move down, then that would be exactly what I would be looking for the continuation of the downtrend. Just be a little bit cautious because with all the news coming out today, it literally could just continue the downtrend from here. It could just be a correction to the last wave, not a correction to the whole series of waves. So, anyways, definitely recommending shorts on that. Moving on to gold. Boy, gold has been extremely slow going for what, 1, 2, 3, 4, 5, at least 5 or 6 days in a row. Makes me even more confident that this is actually a wave B, the fact that it's so slow, because wave B should be very corrective, overlapping, kind of slow moving patterns. Impulsive down wave A, 1, 2, 3 waves up wave B, and then impulsive down wave C is definitely what I expect. ABC of 4. Eventually, I think this wave 4 is going to go down to at least the $2,800 area, but right now we are definitely still moving up. So going down to the solar time frames, if we zoom out a little bit so we can see this whole pattern, I think that we're in a wave B. I think that this is an A. I think this is like 3 down, 3 up, 3 down for like a WXY of B. And I think we're still up for a wave C. Now, a wave C, I think, is definitely going to take out these highs, where it could possibly even push up to like the 88% because gold does like to make big corrections. So it could push up to there, then go down, or it could turn it to 78%. Either way, I would definitely be looking at this whole pattern as a wave B, and I would definitely be looking for a short at a Fibonacci level, trying to identify the end of this wave C trend. Because if we identify the end of this wave C trend, then that would be the end of the wave B, and that would be the beginning of a downtrend for a big wave C, probably down to about the $2,800 range, just like what I was showing on the daily time frame. So definitely looking for that on gold. Moving on to the dollar yen. Now, we are moving up a little bit on the dollar yen, but there is really no proof whatsoever that this is making anything beyond just a crutch into the last wave down. So we got our Fibonacci retracement out here. We are definitely looking at this move up as possibly just another correction in a downtrend. If this really is a wave B on the weekly, which I think it is, that means we're in a wave C downtrend, which means it will likely make lower high, and continue this low high series that it's been making over the last several weeks. So definitely looking at that as a correction. Now it is pretty impulsive up, and possibly it could continue up a little bit more. I mean, it could even go up to any one of these fib levels. I mean, it could go to the 61, it could go to the 78. All I know is when I see some sort of a recognizable pullback to a fib level with like a nice engulfing turn to the downside, I am definitely going to be ready for another short. So if you are trading the very short time frames, like the 1 hour and below, ever since we got a breaker structure on the 1 hour, you could be looking for longs. If you're more of a swing trader, then you're probably waiting for a fib bounce to go short for the continuation of the downtrend. So it kind of depends on what kind of trader you are. I don't really trade too much below the 1 hour time frame, so I'm definitely waiting for sorting opportunities. Moving on to the euro again. Now the euro again did break structure. And the yo is very strong right now. Because of correlated pairs, I still think there is a chance this could be an A, B, C. But if it goes beyond the 138% Fibonacci extension of wave A projected out the top bottom of wave B, then that's going to invalidate this. I also have an alternative count on the weekly time frame, which I guess I can show you that, of this being 1, 2, 3 waves up, 1, 2, 3 waves down, and then like either 5 up or 3 up for a WXY or a flat before it goes down. That definitely is a very likely possibility, especially on the euro again because of how strong the euro is. But if it does go up to that 138, make like a double top on sort of time frames and then pulse it down, I would definitely go short because it definitely could be just an ABC correction, even though it's a lower low, to just this last wave down. And the reason why it broke structure could be because of the euro strength, and it may have nothing to do with the yen itself. So keep an eye on it. If it goes beyond the 138, then I'm definitely going to say that it's going to go up, making either 5 waves up or 3 waves up, like I showed on the weekly. Going down to the 1 hour time frame, like I said, if it makes a double top type thing at the 138 and it goes down a break structure, I would definitely take it as a short. If it goes up to the 138, bounces, doesn't break structure, just keeps on trending up, then I would definitely keep on looking for longs. So just pay attention to your fib levels and pay attention to your structure. Your structure is going to tell you when a trend is over if you know how to pay attention. So looking for longs unless you get that double top breaker structure at a Fibonacci level. Moving on to the pound yen. The pound yen has definitely not broken structure up yet. It's very sideways, which makes me think that it probably is a correction and that this probably really is going to end up going back down again. So I'm definitely still very bearish on the pound yen. I still think that unless we break above that structure with strength, that this is still going to end up potentially going down for a wave C. But my alternative count, just like on the euro yen, is 3 waves up, 3 waves down, and then 5 waves up, or 335 for or 333 for WXY. So it is definitely possible that it keeps going up. But for now, I'm definitely sticking to my original analysis, which is that this will go down and it will make a lower high on the weekly, and just keep on trending down. So keeping all that in mind, let's take it right down to the 1 hour time frame. So really, I mean, if you're trading the 1 hour time frame and below, I would be looking for longs. If you're trading like the 1 hour time frame and above, I would be looking for like a breaker structure down and potentially like a little pullback to get short, because I still think that this is all very corrective, and I still think there's a very good likelihood that it will continue the downtrend. So really, just like everything else, it kind of depends on what you're doing. If you're a short time frame trader, you could be looking for longs because it could just go down, make a higher low, go up, make a higher low, and go up. Or it could just go down and break structure really at any time and just continue the downtrend, because today's dollar news probably will affect the yen also, because the yen is a risk on, risk off currency. So I would definitely expect to see some reaction out of today's news on the yen pairs also. If you are a short time trade trader looking for logs, if you're more of a swing trader, a day trader, then you're probably waiting to go short again. So anyways, don't forget to join my free Discord channel, which is linked down here at the corner. And as always, thank you for watching and happy trading.